Hello, everybody, and welcome to Coffee and Conversations with AMR Elite Realtors with Taylor Properties. I am Lashana Perry,
And I am Juanita Winky Kennedy.
and today we have a very special guest, Miss Hope Brown, the tax-minded bookkeeper. Welcome,
Welcome,
Hope.
welcome, welcome, welcome. We are
Hello,
so
everybody. Thank
excited
you
for
so much
to
for
have you
having
here.
me. Thank you. Thank you.
Yeah, we
Yes.
are so excited because Hope is a certified bookkeeper and she's a IRS licensed tax practitioner. So we want to welcome her because we know now that we are going into the fall season in October, January will be coming upon us quicker than you know it, and tax time is coming. So for all of you out there, we know everybody has to take care of their taxes, especially as entrepreneurs. We want to make sure that our taxes are tight and right. And Hope is here to make sure we are on the right track. And you can answer any of your questions in the feed for her, and we'll make sure that she gets them. But I want to start out, Hope, with just asking you because, like I said, we are about 3 months from 2023.
Yes.
Can
So
you believe it?
I
I
The
can
know.
year is almost
right?
gone.
Time is
Crazy.
flying. And so, what are some of the things that business owners and homeowners should do to prepare for this upcoming tax year?
Yeah, sure. So I'm gonna go over a couple of things which I like to call just fundamental rules and kind of preparing for the tax season. Stuff that people don't think about is just having a place to organize all of that paperwork that's going to be coming in into like that you're going to be getting from the different tax reporting authorities at the beginning of the year. And I just say that because with a lot of my clients, when we're trying to get things straight, they've gotten the statements, but maybe they're coming to see me in like March or April, but they misplaced them. So definitely just try to get someplace, if it's a folder, whatever, just try to get someplace where everything is organized. Even if it's electronic copies, an electronic folder. That would be like a really fundamental tip that I have. And then also, guys, just confirm that anybody who's going to be sending you a tax document, maybe you moved, maybe different things happen, maybe you switch jobs. Go back and make sure now that they have your right contact information, whether it's email address, address. That's another big issue that I see where people want to get their taxes done, but maybe the W 2 went to an old address or it went to another email or they couldn't get into their account. Like, just start getting that together now. And then lastly, what I think is if any big changes have happened since last year, whether you're individual or a business owner, like, don't be shy about checking in with your tax professional just to make sure you don't have any kind of surprises come the tax season. Because now we have a couple of months to really take action before December 31st. But after that, it could be some things happening where you may not have that opportunity. And I would though one last thing in there. We're kind of like an automated society now, and this goes back to kind of checking your paperwork and stuff. But a lot of people have been getting paid during the year, especially if they're W-2 employees. They have never looked at their check stub. And
Mhm.
guys, you want to look at that check stub before the end of the year to just make sure that the withholdings look correct. Again, it's good when we can catch stuff and we can manage it. It's nothing worse than being in front of somebody at the tax table and they're owing and they had no idea that they were going to owe. But just kind of look at that check stub and just make sure that everything is in line that should be in line, if that makes sense, ladies.
Yeah,
That makes a lot of
absolutely.
sense.
Good information. I'm taking notes over here too, guys. So
Mhm.
I want to say, now, especially as entrepreneurs, what are some of the
Yes.
things that we may forget that we could write off to help
Mhm.
us kind of
Mhm.
owe less or maybe not owe, but and also the homeowners, if you could kind of give us a scenario on both sides for
Yeah.
write-off.
So okay, homeowners, I'm gonna go through one or two things. So I don't know if you guys have heard about the Inflation Reduction Act that passed in August, but that bill that passed it renewed a lot of the energy credits that homeowners can take. So those are for primary residences. So if you were thinking about buying things like, new HVAC system, hot water heaters, things like that, definitely this is a good time to buy them, especially if they're energy efficient, because you will be able to get credits for that. And you just want to talk to your tax person at the end of the year just to make sure that you tell them you've got them so that you can get those energy credits. So that is definitely what I was saying, because they extended a lot of those credits were set to expire at the end of 2022, but
Mhm.
they are getting extended to 2032. So, if it's time for that gas unit or hot water heater, like make sure you know the rules for that. All right.
So would
Um,
that include appliances? I'm just curious.
so there are like major improvement things. So if you buy like a dishwasher, no. A refrigerator, no. So it would be like a major replacement, like a heat pump, a HVAC system. They do allow hot water heaters to be included with that also, but more so in that higher tier. So,
Mhm.
yeah. So just
Yeah.
something else for homeowners. And most people know this, but maybe some people don't. If they're a brand new homeowner, they've never owned before and they just bought in the last year. Homeowners can deduct mortgage interest that you're paying on that loan. So, guys, look for that 1098 mortgage statement that's going to come from your mortgage companies, whether you have a first, a second, an equity line of credit. Those are deductible, and also your property tax payments. Sometimes, depending on if there were refis during the year and things like that, and they're overlapping, you want to make sure that the 1098 that you get has information about the property tax payments that you paid during the year as a homeowners, because those could be tax deductible also on your federal return and lower your taxable income if you're itemizing. So those are
Okay.
some of the things.
Okay,
Okay.
great.
And what about for entrepreneurs? Any tax breaks?
Yeah, so with entrepreneurs, I know everybody knows about the home office deduction, but I want to go over that, like the home office deduction, because there's a lot of confusion over that. So first of all, I think some people are afraid to take it, but guys, it's an easy deduction as long as you're using one area of your house exclusively for business purposes. Even if it's a combination room, but you've sectioned off like this one little square footage over here where you're using it for that, you can use that to do the home office deduction with,
Mhm.
because it's based on percentage. So you will need to have for your tax person or the software that you're using the total square footage for your home, and then just the square footage for that section. And then that helps you calculate what percentage you can actually write off. And with the home office deduction, there are direct expenses and indirect. So a direct expense would be like, okay, for that home office, say you just bought that house and you're going to do some upgrades on it. You want to be able to have that home office right because you're knocking it out the box this year.
Mhm.
If you're doing upgrades in that room, like painting, any kind of remodeling exclusively to that area, maybe you're buying furniture for your office, anything that's going in that space where your office is, that's a direct expense and you can write that off 100%. Now, for indirect expenses for the home office, that goes to where that percentage. So, if the total percentage of your home, the home office portion, is like 15%, you can write off 15% of your light bill, of your gas bill, of your alarm system, of the maintenance for your house. So, just make sure that you're keeping solid records for that too, so you don't miss out on any of those deductions. Does that
Okay.
make sense?
Yeah,
Yes, it does.
good to know.
Yeah, HOA
Yes.
fees, utility, internet, homeowners insurance, all of that stuff, a percentage of that can be written off of the home office. So definitely, if this is, especially we have a lot of new business owners who are starting in the last couple of years. So I know a lot of people are used to doing their own returns, but definitely I cannot emphasize enough, like it's worth its weight in gold if you have a good tax person who knows the tax law, who can really help you excuse me, navigate those waters and really not shortchange yourself with things that could be deductible.
Right.
I think
Not
what else.
miss out on any deductions that you could
Yeah.
potentially take advantage of. I understand that.
Yes. Yes. You
Yeah.
got to learn how to play that tax law game. So,
Yes.
yeah.
Okay.
Um,
So I have a question.
yes,
What
ma'am.
are some of the essential house bookkeeping practices for people that are saving up to purchase a home to help them to get on the right track? What are some of the really essential bookkeeping practices that they should?
Yeah. So two things. So I'll start with individuals first, and then I'll go on to business owners. But as a business, I mean, as an individual, I know I'm buying a lot of property too. I'm an investor, or maybe I'm moving or moved recently. You want to begin to have your paperwork in order because, especially working with a mortgage broker, they're going to be asking you for all kinds of things. And it goes back to kind of like preparing for the tax season, where I was saying, like, just create a space that you have all of your paperwork at. And that would be things like tax returns for the last 2 years. Make sure you have copies from your preparer, or you can download it from your software. Your bank statements for a couple of years. You're going to need all of that stuff together if you're working with a broker. Anything or documentation to that can prove income that you'll be claiming. You want to have all that stuff together. I talked about the tax returns for at least the last 2 years, and then to think of depending on when you're purchasing, just kind of plan ahead because you may want to you may need to file, depending on what time of the year you're buying, and your mortgage broker can tell you that they may not want to accept the last 2 years. They may want you to file earlier in the year, and that's just one more reason why. Just be organized and be willing and ready to file early in the year if you're thinking about buying early in the year, because it might be required. And then the last thing I'll talk about is with the tax returns. Sometimes people just don't have copies of their tax returns. And I'll give you a tip that a lot of people don't know about is taxpayers, we are able to go to irs.gov and get a copy of our tax transcript for prior years. So take advantage of that if for some reason you don't have your tax return available and ready when you're about to purchase. So for business owners, so I can't even emphasize and say enough. You want to have your financials prepared. You want to have all of that stuff in order. And by that, I mean, you, depending on who you're working with, what kind of loan you're getting, they might ask you for anything. They might want to see financials for the last 2 years. So you want to make sure you're working with a bookkeeper, someone who knows QuickBooks, or even if you're using an Excel spreadsheet to track your income and expenses, the broker may be asking you for those kind of documents going forward to validate that you qualify for that loan. So just have that income tracking information available. And this should go without saying, but I'll say it anyway because I'm meeting more business owners who they're commingling. Like that's such a bad thing to do. And it makes trying to prepare for the tax season or even buying a house like a nightmare. But you definitely should have a separate bank account for any of your business transactions that you're doing, if that makes sense.
Yes.
I mean,
Understood.
I'm guilty. I mean, but I mean, when you know better, you do better. But that's just going to make your life so much easier. And there are a plethora of other reasons why you don't want to have your personal stuff mixing with your business stuff.
Exactly. And then my other question is, what is some advice that you can offer to someone that has tax debt and they want to purchase a home? Is it a possibility, or do they have to pay off the tax debt before they actually purchase a home?
No. So I'm not a mortgage broker, but I do work with a lot of mortgage brokers who are trying to get their business owner approval ready. But I would definitely say the first step is you want to be working with someone who's knowledgeable as far as a mortgage broker who really knows those rules of how to navigate you through everything. So, who knows the current mortgage loan processes and stuff. But yeah, I mean, so the broker that I work with on a lot of deals, well, I was talking to him about this actually about a week ago. And he works with a lot of people who have IRS debt, mostly business owners. But the answer is yes to this question. But as long as there are no judgments and you have a payment plan actually established with the IRS, if you do owe, you just want to make sure that that is in place. So, because as during the approval process, they are going to probably pull, especially if there's IRS debt, like an IRS accounting report. So you need to be able to prove that you're on some kind of income tax installment agreement and that the payments are being made timely. That's going to be super important. So, yeah.
Well, that's good information to know.
Yeah.
Tax time is upon us. It is upon us, guys. Yes.
Fun time. Yeah. It definitely ain't bored right now. Exactly. Not born.
We're in the thick of the time, and I know it's something that a lot of people don't really want to talk about because some people, like you said, may be in IRS debt, may be nervous, may be uncertain how to navigate those waters, like you were saying. But it is a conversation that we need to have so that we can educate everybody on how to properly get through this and be successful and be in compliance. So we just appreciate you so much, Hope, for all your wisdom, for joining us, and for sharing that information with us.
Thank you, guys.
So, I mean, guys, at Coffee Conversation, we try to deliver every aspect of this home buying process, what you're going to encounter, to bring in the professionals that can help you to get you to the closing table. And so, if you need information for taxes, if you need a tax preparer, if you want to get things right, you can definitely reach out to Hope. We're going to make sure we post all your information, Hope, so they can know how to contact you with this video. And guys, so I just want to say, what are we, Juanita?
We are reliable realtors providing
exceptional service.
No need to go far. Come on down
to
AMR. We love you guys.
Yes,
thank you so much for coming with us today.
Sure.
Thank you so much for watching. Thanks again, Hope. Have an amazing day.
You too, guys. Thank you.
Bye-bye.